Good evening, everyone. Monaco 64, home of alternative economics and contrarian views. Can you hear me? Oh, that's good. I'm trying something new. I'm using my Zoom, and I'm going to share a lot more today, the screens, because I wasn't doing that before. It's taken me a long time to work it out, but I've done it over the day. So let's have a look here. I need to get used to this. That's why I started a little early. Yeah, Billy is here. So we're going to talk about whether gold has been a good hedge versus inflation. Of course, we're going to look at both kinds of inflation. We're going to look at the CPI, which is the government measure. We're going to look at the M1 money supply and also M2 money supply. I'm just going to do something here. Okay. All right. Great. I'm glad to hear everything's working. I've got another camera. It's not my computer camera. I'm using an outside camera. I'm using Zoom now, and I'm going to share quite a bit with you guys today. I'm just going to wait now for people to come in. Oh, just to, can you see that? We got a Billy says, snore on and keep stacking. That was an idea from my wife because we know that that Billy does snore a lot. M1 money supply Abrams. M1. Yeah. That's good. So let me just, I'm going to share something here. Let's see. Okay. Let's have a look. Yeah, I'm going to wait a little bit before I share. Let's bring something up again here. Okay. The Cupid stunt says Billy snores more than my wife. Yeah, my wife does snore as well. Sometimes I get Billy and my wife. It's like in stereo. So we got Shane Sturgis, Mr. Ashford, Cupid Stunt, Brady Girding, Pablo Pina. Nice to see everyone here. And yeah, this should be a lot better, this live stream. Going forward, it's going to be hopefully a lot better. I'm using my Zoom software, and I'm going to show you a lot more stuff, share stuff. I'll be able to show you charts and articles. Kurt Fordyce from Boston. Robert Dooley from West Palm Beach. Okay. Yeah, we still got some time. We got 7 minutes really till the official start. Let's see if there's anything here. Oh yeah, let's do something here. Let's share the national debt. I think that's getting pretty worrying. It's not just the U.S., of course. It's everywhere in the world. So here it is, the national debt. Can you guys see this? We're approaching 28 trillion. If we go back, let's go back to 2016, just before President Trump came to power. We were below 20 trillion. The debt to GDP, if you see here, was 104.4% of GDP. So we now go forward to the present day. Yeah, we've got 130.69%. But the other thing that's really worrying is in 4 years' time, we're almost up to $50 trillion dollars of national debt, and we're at 200% of GDP. So it's quite amazing. I think it's not sustainable unless we get massive economic growth, and I don't see that going forward. Uh, can you just let me know that the screen has been shared? You can see everything. Just testing. Credit card debt is decreasing, says Lowell Geddes. The other thing that's worrying, if you can see here, is the unfunded liabilities. This is 205 trillion. This is money that the Uncle Sam is going to have to be paying people through, Social Security, people retiring, Medicare, Medicaid. It's a mess. So let's stop the share here. This one, go back to normal. Let's see, need to get used to this, but it's going well. Let's just wait now to see more people coming on. Yes, Joker Alpha, I was early because I'm using Zoom software. I've got another camera. I'm not using my computer camera, and I'm going to be sharing a lot more stuff with you guys. So I'm a little bit ahead here. Just in case it didn't work, I would have to start again. But it looks like it went well. I spent a lot of time today trying to set this up. I had to watch a few YouTube videos of how to do this. And yeah, I mean, I'm pretty good at technology, but I'm not really I have to work at it. I guess when I worked in an office in the city for 20 years, we had IT people. You just call them over and they fix it for you. A lot of times they would just shut down and reboot. Bob Hunter's in the biblical mood. Yeah, I think we are going basically through biblical times. Everything is unraveling, in my opinion. Bob Hunter says, Revelation 14:14, behold, a white cloud sitting on the cloud was one like a son of a man, have a golden crown. Isn't that the first seal? I think that's the first seal, the crown. Some people argue it was the what happened last year with this disease. It was called a crown, right? Some people argue I think the third seal is where with the balances, is it the black horse? The rescaling of the balance, that could be financial. When is that going to happen? I don't know. No says, don't panic, just keep stacking. Yeah, that's interesting, No. I've got a few coins, bars, different kinds of coins and bars I'm going to be showing people because a lot of times I have questions about what's a bullion bar, what's a bullion coin, and what's like a constitutional or junk coin. Brady Girding, Mario, what do you think of the UK warning people about Bitcoin? Well, I think I'm not sure. I haven't really looked into it very deeply. I think they're just warning people more about the volatility. Yeah, because we saw in 2017, 18, Bitcoin topped almost at 20,000 and then dropped back to 3,000. Now we're around 31,000. It could very easily drop back to 10,000. So I think that's what they're warning about. Because there are stories out there of many people doing very well with Bitcoin and in the UK. So, and the other worrying thing is that we're seeing, I get a lot of emails about investing in Bitcoin. And I think even one of the celebrity chefs, they've got an advert with him. Gordon Ramsay apparently is, I think, I got an email saying that he's promoting Bitcoin. So I think it's getting to a point where it's getting very bubbly, the price of Bitcoin. Olgi, thank you for your super chat. Biggest bet against dollar, nearly 3 years, not looking good. Yeah, I've got charts today, so that's really good. So I'm going to be showing you all that, Olgi, and more. This mug here, I just designed it. It's got Maneko 64. And then here it has Billy says, snore on and keep stacking. So, okay, we're going to look at my, so I've done a slide presentation about whether gold has been a good hedge versus inflation over the years. I saw an interview. Is it Michael Saylor? I've been talking about him recently. He was interviewed by Daniela on Stansberry Research, and he said, "Oh, gold is finished. It's not a hedge against inflation anymore." Well, I know that I've said that inflation is the inordinate growth in the supply of money and credit. But we're going to look at what most 99.9% of the people think inflation is, and that's the measure, government measure of inflation, which is the CPI. So I'm going to start here, the slide. So hopefully you guys will enjoy this. I need to share it now. Let's go. So you can see this. Let's start the slide. So here we go. M1, and this is a logarithmic chart. I've taken this from the Federal Reserve. You can see M1 has risen by 475% since 2002. Let's have a little look at this chart. You can see that prior to the 08 crisis there's the big gray bar. Those bars signify recessions. So you can see that the growth there prior to 08 was pretty steady. We saw a pickup in growth after the dot-com bubble as well there in 2002 and 3. And then after the recession ended in 08, 09, you know, we really picked up the angle of attack. And it's been going up ever since. And of course, we picked up again this year, as you can see, massive pickup. The logarithmic shows you the percentage change. It's a smoother chart. So let's go to the next chart now. So that's, I compared the price of gold here, which is the red line. And you can do that in the Federal Reserve of St. Louis, the FRED website. So you got the gold fixing, 3 p.m. fixing, all the way to the early 70s. And then on top, you have the M1 money stock. And I will say the M1 money stock, what's that composed of? Well, it's cash, basically cash that you hold in your wallet and coins. I think that's just over 2 trillion. And then the other 4.5 trillion or so, that's demand deposits. What are demand deposits? Well, that's money in your checking account that you can, it's ready money. And it also includes traveler's checks, but no one hardly ever uses that anymore. The interesting thing here is if you look at 1980, when gold topped just under 900, we went through the money supply there in terms of the chart. And then up until the late 90s, the price of gold pretty much was fixed there, as you can see, around 400. Some people say, well, you know, the 80s were bad and the 90s were bad for gold. But compared to where the gold price was in 1970, gold was actually way above there. So if you had bought gold at 35 or 50 or $100 in the 70s, you would have been okay. In the 80s and 90s, you would have switched probably to some paper assets and you would have done well as well. And I think and you can see that the money supply M1 kept growing over the years. And I think gold didn't go up because we'd had that massive spike in the late 70s, early 80s, and that pretty much rebalanced the system. But I think where the problem started is here in the late 90s, up until 2002 and 3. You can see the price of gold went down. It kind of went below, didn't stay stuck around that 400 level, and then and the money supply kept growing up. So ever since the beginning of the century, gold has had to catch up with the money supply growth, M1 money supply growth. And you can see that in 2011, it almost matched that line again there when we went to 1920. And but money supply growth has kept growing, as you can see, massively. And even now it's growing massively. And gold, it looks to me like we've been doing what gold did from the late 90s to 2002. We've been consolidating there. And I think we're going to catch up with the money supply line. We could even go through it. And I think that money supply line is going to keep growing. So you can see the number on the left-hand side there, 7,000. If we just go under that line in terms of gold right now, we'd be at 5,000. But as I said, I think the money supply growth, M1, is going to keep going. Money supply is going to keep growing because the government is going to have to keep printing money. The debt is going to get worse. They're going to keep doing stimulus checks. They're going to have to keep sending it to people. So let's go to the next page. This is M2. So M2 is M1. M2 has grown by 254% since 02. So M2 is M1 plus time deposits, basically money in money market funds and savings deposit. It's not quite ready money, but it can become demand money very quickly. So that's M2. So M2 versus gold, the relationship there isn't as clear as the M1, but you can see that we're quite far away from that line. If we catch up, let's say, to a normal level, like in 1980, we could be up to 4,000 or 5,000 very easily in gold. So, yeah. So this guy, Michael Saylor, he said that gold is not doing a good job of protecting against inflation. Yes, and I've said before, inflation is not the CPI, but 99% of the people out there in the markets, economists, Wall Street, they think the CPI is inflation. So I did a little slide here. When I first bought gold in 02, the price of US fiat dollar was $321. So adjusted for CPI, gold would have matched the rise in CPI. For gold to rise, to match the rise in CPI, it would have to be trading, as you can see, at $461.8. And we are trading at 1854. So gold is more than protected investors and savers versus inflation since 02. And I don't think there was any Bitcoin in 02. So Bitcoin hasn't done that. So let's go forward here with this presentation. So this is what's really interesting. And does that mean that gold is not going to go higher? No, I think if you saw from the chart earlier, M1 and gold, we're still massively undervalued, I think, in terms of the price of gold. But it's just a coincidence here that if you take the spot gold price versus the fiat, the spot gold price, the spot gold price settled at 1854 on Friday. So that is 477.57% increase since 2002. So almost exactly matching the 475% increase in M1 since 2002. It's more than protected people, even versus my definition of inflation, which is the increase in the supply of money not backed by real savings or gold. So here's the definition, how the definition of inflation has changed throughout the years. In the early 70s, as we can see here, Webster's said an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. And if you go back further to the Oxford Dictionary, 1925, inflate, abnormally increase state's currency, especially by issue of inconvertible paper. So have we got anything else? And that's it. Um, let's Okay. How was that? Did you guys enjoy that, or is that something that you like to see more? Those kinds of, how can I say, slides? Okay. So now I can read your questions a bit more. Tony Blaylock, how much can the government tax gold and silver once they take away the dollar? Well, here in the UK, you know, there is no tax on gold for, how can I say, coin of the realm or sovereigns. It's very hard to say because I think the system is on its last legs, the monetary system. So I'm not sure what will happen to the taxation of gold in the U.S. Yes, Janet Yellen the other day was talking about taxing unrealized capital gains. Well, that would be a blow for every investment asset, but I don't think I don't think that's going to happen. Uh, Brady Girding, is now a good time to invest dollars in Brazil? Well, emerging markets have been doing well. I saw a headline. I didn't read the whole story, but a lot of money has flown into emerging markets in the first few weeks of the year. And the other thing as well, if commodities are going to do as well as I think they are, I think emerging markets will do well, especially Brazil. So yeah, that could be a way to invest in commodities. So let's put this aside. Okay. Pablo Pina, do you think Bitcoin took a huge amount of potential capital from gold? I'm not sure if it was huge, but it's definitely taken away. How can I say? A lot of some investors, of course, have moved into Bitcoin instead of precious metals, but at the same time, I think a lot of people, younger people, like in their 20s, 30s, and 40s, they wouldn't have known about sound money if it wasn't for Bitcoin. And by learning about sound money through Bitcoin, they've learned also about the system, the fiat currency system, how unsustainable it is, and how gold and silver are important part of that as well. So yeah, I don't think every crypto enthusiast or Bitcoin enthusiast ignores gold and silver. So yeah, it's taken some capital and money away from the space, but I would say as a whole, it's woken a lot of people up about the monetary system, and that will be eventually will be translated into a lot higher or a lot lower fiat currency prices versus gold and silver. Pat says M1 and M2 doesn't matter if the money is not being spent. It's unrealized inflation. No, Pat, inflation is the increase in the supply of money and credit. So that results into higher prices. That money is going to flow somewhere. It's the Cantillon effect. Yes, it's been flowing into stocks and bonds and paper assets, but I think we're in the beginning where that money is going to be flowing. Not just that money, but also all the money that's in the paper assets is going to start flowing into hard assets like commodities, precious metals, farmland, all those kinds of things. So, yeah. Uh, Flip Van Sanken. No, QE is definitely not stopped. I think it was in March or April last year. The Fed announced that they were going to do unlimited QE. They didn't even give a date when they're going to stop, or they didn't give a limit of how much they're going to do. And with all the talk of infrastructure spending, trillions and trillions, all the talk of new stimulus checks. Someone's gonna have to help the U.S. Treasury monetize that debt, and that's going to be the Federal Reserve. And they do that through creating reserves out of thin air. With those reserves, they buy the bonds or treasuries from the primary dealers, which are the major Wall Street banks. So QE is still ongoing. I think they're doing about 120 billion a month right now, but that could go up. Joker Alpha, if 1 or 10 people own all 21 million Bitcoins, will Bitcoin have value? It won't be money, because it won't be, money needs to be useful to the whole of the society. But if 1 or 10 people own all 21 million Bitcoins, it's not really going to be money, I would say, circulating. Mm. Let's look at I'm going to bring up another chart here now. Let's have a look first here. Getting used to this. Okay. I'm going to bring up the dollar index chart just to show you guys that we are in a downward cycle in the dollar index versus other currencies, of course. That's what the dollar index measures. So here we go. There's a dollar index. And if you go back to like 1969, and the dollar index was created in 1973. But they've extrapolated back to the 60s. So it topped in 1969, made a bottom in 78. So that was 8 years, or 9 years, sorry. And then it went up to the all-time high there around 165. That was 1985. So that took 7 years. And then from 1985 down to 1992 there, we went down. So that was 7 years again. And then from 92 to 2001, that was 9 years. We went up to 120. And then in 2008, we went down to 70. So that took 7 years. And the cycles in the dollar index, they have been like 9, 7, 8, 9, 7 years. So when we topped in January of 2017 at I think it was 103.82. So that was 9 years from 2008. So I've been making videos for the last few years saying that I thought that was the top because of the cycles. And yes, this year the dollar did spike, but it didn't make a new high. So I think that the dollar index, if you can, I think we're gonna keep going lower. And by 20, if you add let's say 9 years, because the longest cycle has been 9 years. You add 2017 plus 9, you get 2026, or it could be 7 years, and that would be 2024. So, and I think we're going to make a lower low. You can see here that the lows in the dollar index have kept getting lower. The highs have kept getting lower as well. So I think we will break 70 eventually in the dollar index. So I hope this chart, you enjoyed this chart. So now let's get out of here. Let's stop the share. Okay. So that was the dollar index. Basel 3, James Byrne. Yeah, Basel 3, I think it was last year, the Bank for International Settlements declared that gold was a tier one asset. Yes. Um, it doesn't mean to say that the banks are holding gold, but if they do hold gold, they can count that as a tier one. And I think that is a preparation for some kind of comeback for gold. And when I say comeback for gold, I mean for the monetary system, international monetary system. It doesn't mean that gold is going to circulate again as coins, even though that would be nice, but it will be used to settle accounts among between countries, trade accounts. I think it's for the US, it's still too early to go back to a gold standard because the US has a huge trade deficit. The US needs to build up its industry again. The US needs to produce as much as it consumes. So do countries like the UK. And but I think eventually we're going to have to go to a sound money system. And yeah, as I said, that doesn't mean to say that we're going to be using gold and silver for everyday transactions. It's just going to be what countries, let's say the US has a current account deficit of $1 billion with, let's say, the Ukraine or another country. At the end of the year, they will pay that in gold and settle. Right now, one of the reasons why the trade deficit and the current account deficit has gone out of control since the 60s really is because we're not on a sound money system anymore. It's very easy just to print and print and print. Silver fishing are 22 karat gold Eagles and pre 1913 Britannia's classed as investments grade for Basel III. Uh, I would say, bullion banks and the banks that are tier one, that have tier one assets, they would probably have gold bars. They wouldn't have coins. So it would be the 400-ounce bars or kilo bars. I don't think, the big international banks would be having Britannia's as gold, but you never know. So it's more the 400-ounce bars, I would say they'd be using. So I said I was going to show you guys a few silver coins and bars um, this evening. Uh, I'll show you, first of all, uh, silver bar. It's a Herreos silver bar, 250 grams. So there you go. I've had this for quite a while. So that's one way to buy silver Herreos. Uh, I've got Angle Hard. That's a 50 troy ounce bar, quite heavy. And then, yeah, and I have 1964 quarter. That's 90% silver. That's constitutional silver, I guess, that used to circulate as currency. And that's a 64 half dollar JFK. And this is another half dollar, but from 1937. You can see there. So, and then you have smaller bars. I've got these 1 ounce Liberty bars, silver. And of course, I've got constitutional dollar. There you go. So, yeah, so that's bullion. For example, that kookaburra silver coin is bullion, but these are not bullion. You see, these are like they used to circulate. Bullion usually is 999, and the circulating coins are 90%. Or if you're in the UK, the pre 1920 silver coins were 925 or sterling standard. That's a florin. So hopefully that helps people understand a little more. SAC Media, are you still purchasing gold at today's price? And do you see gold breaking 2000 this year and remaining above this level? I try to buy gold and silver as much as I can if I have extra fiat. Um, I think worrying about the price is yeah, counterproductive. Yes, I do give updates on the price every day because I look at the markets, but I think one should think of gold and silver as savings. So you should count, how many grams you have or ounces or kilos of silver. Try to increase it. Yeah, the price. Yeah, the price will continue to go higher. It's not even a forecast or a prediction. It's just looking at the fundamentals and the fact that the way they've been inflating the system, and as you saw earlier, the chart of money supply, it's been increasing. It has picked. Did the increase did accelerate after '08, but after the crisis last year, it's accelerated massively, and I think is going to keep doing that because if they stop inflating the system with money and credit, the whole economies it's gonna collapse, especially with all the condition that our economies are in right now. Even if they reopen the economies and say everything's fine, I think people are gonna have changed a lot of their behavioral. Their behavior is going to change as to the economy and spending and consumption. Okay, another interesting chart here I'm going to bring up. Hopefully, you guys will like this one. So, this is the gold price. This is from bar chart, and this is a logarithmic chart. I think this chart is good chart to look at because you can see how the bull market since 2001. Yes, it's been a very good bull market, but the top in 2011, the correction we've had, in it's been relatively shallow. It has gone on for a while, but and you can see how much room there is still on the upside. I compare this move higher here to just around 1978 when we were breaking the 1975 high here. We're just starting to break out here the 2011 high. And as you can see, there's a lot of room on the upside. I can't even bring the chart down a bit, longer. But yeah, and it has been frustrating since the top in August last year above 2000. It feels frustrating, but if we look at this chart here, it just looks like a little blip. So that's why I think people need to calm down and just keep stacking because there is no option for the monetary authorities, for the governments, except to keep debasing their currencies. They can default, but a default will collapse the whole system. You collapse the whole system, you're going to have bankruptcies, and even in bankruptcies during the Great Depression, if you had gold, you did well. Of course, they confiscated it, but if you're lucky enough to get away, you know, I've heard a lot of stories of people who shipped it offshore before they did. So let's have a look now at silver. Silver is a really interesting chart as well. Okay, here we go. So there's the silver chart. It is different than the gold, but as you can see, the top in 1980 and the top in 2011, very similar price level at 50. This is what they call a teacup and handle formation. And this is also logarithmic, logarithmic chart. So that's why, to say that silver could go to 75, looking at that chart, it doesn't seem out of the realms of possibility percentage wise. And I think if you look here at this move in the 70s from around $1.22 there to 1975 to $6.50, we had a consolidation there, and then we zoomed up in 1980. And I think we're doing the same thing here. We from 2000, let's say we've gone from $4 to 50, and now we've been consolidating. And I think once we break this 50, it's going to be like breaking this level right here of 660. So yeah, I think it's great that we're still able to buy silver so cheap as it is. Of course, there are premiums that you have to pay. But so I thought you guys would find this interesting. I'm going to bring back the gold chart because there's also a teacup, a smaller teacup in this chart. Just bear with me. Let me share it again. So yeah, this looks like a little bit of you see a teacup here in gold. The silver one, of course, was from here to here, but the gold is outperformed. So the teacup, there's like a mini teacup here for gold as well. So and usually when you break the top of the teacup, you get this kind of consolidation, and you build a handle here. That's the handle. And eventually, when we go back above 2000, I'd expect gold to accelerate. Something different now. I'm going to look at a story, and you might find this funny or strange that I'm going to look at a story in the Daily Mail, but I think it's significant because it shows how the debt problem is growing. The property or real estate market is under pressure. So yes, this guy was a celebrity, was on reality TV. And it says Mick Norcross was battling $6.5 million cash crisis before sudden death. Ex-Sugar Hut boss set to be facing $1.5 million loss on housing project and owed $5.2 million on hotel revamp before being found dead after cryptic final tweet. So yes, so he was invested in a hotel business, in property. I mean, it's the worst place to be under the circumstances that we've been in, since, for almost a year now. And I was reading here, if you go further down, down here, and this is not because I'm interested in Towie. This is just, I think, the story. And here, this is the interesting part here. So it says, accounts for 460 Leisure filed in November showed that the firm was 984,000 in the red, and the book said bank loans stood at 5.2 million for 2019, up from 2.6 million the previous year. The outfit had just 3,600 pounds in its coffers. So I think this shows, this is like a symptom of the UK economy. There's a lot of speculation, investing in property, real estate. There's a lot of debt. And this is not just for property, but hotels, commercial property. And I find it amazing that a company that was this heavily invested only had this much cash. So, and this is quite interesting here, because we've heard that the real estate market is doing well, but look at this. The executive properties picture have an asking price for 5-bedroom property that is on the market for 1.75 million. Some have been on the market since 2019. So there you go. I just thought it would be interesting to show you guys that. So let's get rid of that now. Um, Jeremy W. Yeah, the devaluing of the dollar will outpace the cost of premiums. Yeah, you shouldn't worry about premiums. For example, I started buying silver in the UK back in 2003, about a year after starting buying gold, actually. And I think the price was £3 26 per ounce, and then I had to pay VAT, and that added up to, I don't know, 360 or 370. But now gold is at now, sorry, silver is I don't know, 20 pounds an ounce or so. Am I concerned about that VAT that I paid? So what I'm trying to say, yeah, the VAT or the premium is going to be insignificant in a few years' time, so you shouldn't worry about it. Okay, now I want to show you the commodities market. We're going to look at the CRB index chart. And this is a very interesting one. I said earlier that I think a lot of money is going to flow into hard assets. So this is the CRB index. Uh, and I'm going to go back. Let's see. Let's go back to the late 90s. You saw that the gold and silver bull market started around 2002 and 3. The bull market in commodities didn't really start until you can see around here when we broke the old highs. So it was more towards middle of 2003, and then it topped. Let's see, 2008, June 2008. It topped before gold and silver top. Well, it topped after gold and silver. Gold topped in March, and then we dropped with the Lehman crisis. We went back up, but when the CRB went back up here, gold made a new high at 1900. So that wasn't a really good sign for gold. And ever since then, commodities have gone down. They bottomed, it seemed, pretty much around the same time gold and silver bottom, end of 2015. But then we had this sharp drop back in March last year. But so what I'm trying to say here, there's still a lot of room for the excuse me, for the general commodities. And I think money is going to start flowing into this sector of assets of the market. Uh, yes, I've spoken about how commodities and CRB is a basket of all the major commodities, by the way. So it's the most undervalued versus the stock market in over 100 years. So there you go. I don't have any physical platinum, John H. I think platinum is going to do well, though. Question on inflation from John Treville. Do you not agree that realized inflation only occurs when high money supply and high money? No, I don't. You see, I don't even know what realized inflation is, Tom. Keep it simple. Inflation is the increase in the supply of money, and we've had that. So that's inflation. And the reason why people say there's no inflation is because the governments tinker with the consumer prices. Consumer prices are just one set of prices. All the inflation, we've had massive inflation since the 80s, early 80s. We've seen the national debt in the US go from $1 trillion to 30 trillion almost. That's inflation. But the money has been flowing mostly towards in the like paper assets and stocks in the last few years. They've been flowing into commodities as well and to gold. But when it starts flowing into the hard assets, yes, I don't think the governments are going to be able to even keep the CPI tinkered with. And then people are going to say, oh, we've got inflation. They're going to say commodities caused inflation. No, inflation is purely a monetary phenomenon. It's created by government and the central bank by basically creating funny money out of thin air. They've been able to hide the inflation for years. uh, not hide the inflation. They fooled people into believing things like you've said there. And I'm not having a go at you. Realized inflation, money velocity. I think we need to forget about those things. Do you really think that things are a lot cheaper? Is it a lot cheaper to live today than it was in 2000? No. Everything important is more expensive. So no, I don't think you can qualify inflation, realized inflation. The other day, I heard someone talk about inflation for rich people is different than for poorer people. That's another fallacy there. Just keep it simple. Yes, and it, check out Cantillon, the Cantillon effect. Let me bring him up. I'll just write the name here. He was an economist. I think back in the early 1700s, he was Irish, French, and he said that basically inflation, the creation of paper money out of thin air, uh, it flows to, it's like a river. It starts flowing and it goes into, it might go into a tributary that's like stocks, and then eventually we'll get to uh, another place where you've got commodities. So yeah, to think that yeah, you need velocity and all that, that there's some kind of inflation that is different. No, the inflation is the monetary phenomenon. What are your thoughts on Bill Gates becoming a top holder of farmland agriculture within the U.S.? Why so much control? I think it's because he probably doesn't want too much farming going on. I've seen that, or he knows as well that hard assets. Well, as an investment decision, I think he knows hard assets are going to be worth something in the future because the dollar has very little time left. The fiat dollar in terms of value. The other thing as well is control as well, of course. And I think it's because technology has done well since March. He's involved in technology through Microsoft, so he's shifting probably a lot of his assets into hard assets, and so yeah, and I think probably Warren Buffett is probably advised him on that. I would say. So yeah, so I think he's seen that chart of the CRB and he's saying, "Well, we need to start buying farmland." It could be as well. Some people might say, and I've said it as well, but maybe he wants people not to farm, so he'll buy the farmland and not do anything with it. But it doesn't make sense. I think he knows that commodities are going to start making a move. And what better way for one of the richest men in the world? He's not going to go and buy, let's say, wheat futures or corn futures on the CME. He's going to go buy the farms. So that's how I see it. Chris Conman, how do you think the Fed will react when core CPI gets above 3-4%? Where do you think gold would be priced and if it was manipulated? I don't think the Fed will be too worried about that 3 and 4%, and they'll tinker with that quite a bit and make sure it doesn't go too far above 4%. They've said they're going to let inflation run because their 2% target. They say that there's been a lot of years that it's been below 2%. So if you get it above 2%, it's going to average it out. So they're not going to be concerned about that. The thing is, if gold wasn't manipulated, I don't think we'd be in the situation that we are economically, socially, and financially. So, unfortunately, when the manipulation of gold ends, it will be the unraveling of the whole social, economic, political system. That's when they're going to lose control. So yeah, so yeah, it's difficult to say where the gold price would be, but it would be a lot higher, of course. Okay, let's have another look at another interesting chart, and I think this one is quite important for us to give us a signal of when the precious metals should start rising sharply again. So this is the gold silver ratio. This is how many ounces of silver you need to buy 1 ounce of gold. And I'm going to go back a little further here. So you can see that in gold, in precious metals bull market, that ratio goes down. As you can see here in 2011, we got down to 30. You only needed 30 ounces. Yes, last year, it was quite amazing that that ratio got up to like 127, it looks like. And now it's dropped as silver's picked up, as gold has gone up. And what we're seeing here is a consolidation. This is like a flag forming here or a pennant. And when this chart breaks below 68 or 69, I think we could see a very quick move lower in this chart, and in a very short amount of time. That would mean a breakout in gold and silver. So this is why we need to keep an eye on this. So I would say, venture to say that a break above 30 for silver would probably point to that gold silver ratio. So, and historically, silver outperforms gold in the precious metals bull market. So we've shown you that one. That, just getting rid of the windows here that I have. Yeah, so I think that was that's enough of the sharing right now. So for today, I think that was good. I think it's working well. So I'm using Zoom now. I'm using another camera so I can share things with you guys. It's not just like a webcam stream. Mario, what happened to the Bee of Darkness video? It should be there. Let's have a look. What happened to that video? It was, they did kind of shadow ban it, Rumpelstiltskin. It doesn't have too many views as it's still there. It's called The Globalists Are Monopoly Capitalist. Yes, it's still there. They've given me a yellow. I'll show you to you guys. I can share this now. So let's have a look here. So this is my studio, and you can see here the monetization. So the little green flag means that you know, it's suitable for all adverts. But this video I did here about and it was about this book here, Brotherhood of Darkness, and I covered the first chapter. And the first day I put that video out, the little dollar sign was green, but it was only later that they made it limited. And if you look at the amount of views I've got, 3,590, compared to the other ones I've done here, you can clearly see they don't like you talking about these things. So yeah, but it's still there, Rumpelstiltskin, the video, if you want to watch it. And for those of you who haven't watched it, yeah, go ahead and watch it, because you might not, it might not have shown up on your YouTube screen. I'll have a sip. For those of you who haven't seen this, this is a new mug. It says Billy says, snore on and keep stacking. There you go. It's a nice photo of Billy. And then we got at Maneko 64. Rumpelstiltskin, what happened there is that I made that video really late on Friday. I was up to like 1 in the morning, and I published it. Maybe I should have waited to publish it on Saturday because I have kind of like a informal schedule for my videos. So, and then I woke up fairly early and I saw that it wasn't getting many views. So I just like unlisted it and put it to come back on around 10 o'clock to see if people would see it. And you probably caught it when I unlisted it, but it's back on anyway. But they have shadow banned it. Oh, Phil Frost says good work on the technical upgrade. Yes, yeah, it's been a few hours sorting it out. It was frustrating, but then I got a hold of it. I watched a few videos on YouTube, instructional videos. That's the good thing. Um, you can do that these days. Gur Olgi, thank you again for those Norwegian kronas. Um, Ask Lord Humongous if he's prepared. Mad Max took place in 2021. I'm not sure about that. I mean, I've heard that before, that Mad Max was in 2021. One thing that's interesting, you know, jubilees are every 7 years. The old Hebrew tradition is that you work, and on the seventh day you rest. And then I think every 7 years you forgive all the debts. And then there's a great jubilee, a massive jubilee is 7 times 7, 49 years. And some people think that what we're witnessing since 2020, because Nixon took the dollar temporarily, he said, in 1971, August 15th, 1971, he said he was going to temporarily suspend the convertibility of the dollar into gold. And basically that destroyed the Bretton Woods Agreement. We've had a non-monetary system. Well, it entered its 49th year last year in August, and the 50th year. That 49th year completes in August 2021. So, yeah, that's another reason why I think the dollar, and by saying that the dollar is going to, how can I say, crash or be reset, doesn't mean the dollar is going to disappear. It's still going to be around. All I think it's going to translate into is into a lot lower dollar relative to other fiat currencies, and especially versus hard assets, gold and silver. It will be a way of, how can I say, yeah, doing a jubilee for the dollar, resetting the, and there's that thing about the Revelations, the third horseman, the third, I think it was the black horse, and the horseman was carrying a scale to balance the scales. And I think that's all it is. Reset is rebalancing the scales. And I think it's going to be from paper assets to hard assets. And it's going to be more than just a cyclical move in commodities. I think it's going to be a longer term move out of paper assets into harder assets. And that's why I think it's really important to keep a hold of your silver and your gold and keep stacking. Not worry too much about the price moves. The price moves are going to get even more wild. I would say we could see $200 moves in gold when it gets higher. We could see $10, $20 moves in silver. So we could see silver go up, let's say from 60 to 80 in one day, and then come back down to like 55, and then people are going to say, oh, it's over, and then it will go eventually to 100. So that's why we need to just keep the big picture in mind. And the other thing as well, if that fails to convince you that it's prudent to hold precious metals outside the system, just think that if you convert your precious metals back into fiat currency, you need to put that in the bank, and that's a loan to the banks. Do you want to finance governments and the banks? I don't personally. And if you do, I'm not sure what you're doing watching my videos. Auntie Stonks, hello from the Black Forest. Magic Torch, Seventh Son of a Seventh Son, Good Iron Maiden album. Yeah, I'm not too much into heavy metal. I think my wife and my daughter like that more than I do. So yeah, we still got 5 minutes until 10 o'clock, 10 o'clock London. Joker Alpha, what percent of fiat should one hold in their portfolio? Well, I think I was listening to Alistair McLeod. He was on King World News, and I agree with him. Physical gold and silver are not part of your portfolio. They're money, so you hold them as savings. Uh, br- uh, I think you should keep very little fiat in your portfolio. Do you mean a stock portfolio? If it does mean a stock portfolio, if you're building a portfolio of mining stocks or commodity stocks, yeah, you could maybe have like five, depending on how the market is doing. Let's say right now, I would say commodity, the mining stocks are pretty subdued. So I'd be probably thinking of putting more of the cash that I have in the brokerage account into the stocks. But apart from the investment part there in a stock portfolio, uh, holding, I think, fiat currency, a large amount of fiat currency relative to your net wealth in the bank is not a good thing. I try to keep just enough to pay my monthly bills and maybe a little more. So yeah, fiat is, I think, holding fiat uh, over the medium to longer term is a losing proposition. Jeremy W about Bitcoin and $100,000 Bitcoin. One of the things that people forget is that the word dollar or sterling or euro, or even if you have to, with the euro, you have to go back to Deutschmark or French franc. All those names are names of coins, gold or silver coins. And, um, and basically, over the last 50 years, those names are not really a true, they're like imposters because what we don't have dollars or sterling or Deutschmarks or French francs or Swiss francs anymore because we have paper. We have the promissory note to real money. So I would say by the time I would say that people who have cryptocurrencies, Bitcoin or others, they should think about that because I think when the system kind of implodes, the monetary system, it will be very interesting to see what happens to what are you going to price Bitcoin is in. I think gold and silver, especially gold, is the common denominator for everything, every value. Gold is at the center of the monetary universe. Right now, it's the dollar, and that's why Bitcoin and other cryptos are priced in that. Bob Hunter, thank you for your super chat. Mary, is your state of consciousness the same now as it was when were 7 years old? Wow, I'm not sure. I don't know. What was I doing when I was 7 years old? 1971. So yeah, that was actually when Nixon closed the gold window. I knew, of course, what money was, and I remember my grandfather. I was one of the youngest well, at one point I was one of the youngest. I was the youngest grandchild, and we used to go for lunch every Sunday to his house. We were like at least 20 people, my uncles, aunts, and cousins, and he would make me sit next to him, and he would give pocket money to all the grandchildren. But later on, he would give me a little extra. So yeah, he got me interested in money. But no, I don't think my consciousness is not the same. I'm not sure whether it is, but I mean, the way I think probably is the same. The way I see, what's good and bad, I would say hasn't changed. Maybe that's what you mean. Christopher Morris says, great show. Remember to thumbs up, you guys. Yeah, Bitcoin is always pictured as a gold coin, even though you can't hold it. Yeah, Libras, pesos, they're all measures of weight. That's right. Mr. Ashford, why do UK notes have promised to pay the bearer on demand? Well, that's a vestige of when you could take a banknote and get, let's say, you took a £5 note before World War One, and you took it to the bank and you said, "I want my money," because the note itself isn't money; it's just a receipt, and they would give you 5 sovereigns. They've kept that on the notes basically as a deception to so people still think it's worth something. Uh, I've called the Bank of England and asked them about that question. They said, "Well, all it means is that you can bring in an old note and get a new one." And then I said to the guy from the Bank of England, "So why don't you write that? You can change this note for a note, this note for a new note." Yeah, it's just lying in plain sight. It's basically fraudulent. I mean, you could contact the Serious Fraud Office about that. Of course, they would do. They're not. They wouldn't do anything about that because, of course, Bank of England, the government, and the Serious Fraud Office, they work together with each other. So that's the long answer about that. Yeah, actually, it was looking at a banknote. I think it was back in 2003 or four, long time ago. Going back to the office from, at work. I went out for lunch and I was putting change in my wallet, and I took out the note for some reason. I saw that promise to pay there, and I thought, What's this all about?" And that's when I actually started looking into it. When I asked the question. All right. I think it's time to say goodbye. Let's see. I just need to make sure now. Because I'm doing this differently now. I don't know where to go now to end the meeting. Okay. All right, everyone. Thank you very much for showing up and contributing to the discussion. And thank you very much for all the super chats. And not just that, but all the questions and being here. And hopefully you guys enjoyed the Zoom presentation, because that's what I'm doing now, a Zoom. Uh, I'll be able to, share a lot more stuff with you guys. So I'll talk to you tomorrow. Bye.